So what is the difference between a primary, secondary, short-term, and intraday trend? Guys, my name is Hamilton. I'm here with the Trading Initiative, and over the next 3 to 5 minutes, we're going to be talking about how you can take advantage of different types of trends. But first, if you like this type of content, please like and subscribe, leave a comment below. Without further ado, let's get into it. So I got a couple emails after the video went out on Friday that we are expecting a short-term pullback in February, and whether or not that changes our 2024 thesis that it will be a bull market. I think it'll just be easier to make a video to talk through the idea of different trend lengths and how you can implement these into your trading. First things first is a primary trend. Your primary trend is going to take anywhere between quarters, years, or decades to play out. All right. So it's the overall direction that the market is flowing. And if we look back at SPY, off of the breakout back in 2013, we left a secular bear market. So for 13 years, following the dot-com bubble through 2013, the market did essentially nothing in terms of all-time highs. We just went sideways, right? We tried to break out again during the 2007 breakout, but we once again were hit with some sort of market drawdown. In this case, it was the GFC, and it took us all the way to 2013 before we could break out again into new all-time highs and sustain that breakout. So this is considered a secular bear market, 13-year range. But after 2013, when we broke out into all-time highs, we entered something called a secular bull market. Secular bull markets mean that over time, the market is going to go up more than down or sideways. If you don't believe me, zoom out on your weekly or monthly and just look at what happened in 2013 and the direction of the market as compared to back in 2000 to 2013. So secular bear, secular bull. Statistically, we still have anywhere between 6 to 10 more years on the secular bull market. This is not the first time it's ever happened. So that is good for the bull camp. So these primary trends can take quarters or years. As of right now, is it fair to say that the primary trend is up? Well, yeah, pretty much everybody across the board can agree that the primary trend of the market is up. Whether or not you agree it should be up is completely irrelevant to the fact that it is up. Next, I want to focus on something called the secondary trend. Secondary trend here is going to play out over weeks or months. So once again, the primary trend is quarters, years, or decades. The secondary trend is going to be weeks or months. Now, markets oscillate, right? Go back on the weekly or monthly and SPY, and you'll see that we make higher highs, higher lows in both uptrends and downtrends, lower lows and lower highs and downtrends, higher highs and higher lows and uptrends. And then obviously when we're going horizontally, nothing. There is no significant new highs or lows. But primary trends they oscillate with the market just as much as secondary trends. The difference is the time length, right? So if secondary trends are weeks to months, what we see are these higher highs and higher lows and uptrends, but they oscillate on a way faster time frame than something like a primary trend. So even though the primary trend is to the upside, these secondary trends can have different market oscillations still moving in the direction of the primary trend, but they will also have a period of correctiveness, etc. As long as we are hitting higher highs and higher lows on the secondary trend, generally bulls are in control from a trading perspective. There are not too many traders that are going to be trading the primary trend. Obviously, these are going to be more so the long-term investors, your 401kers, etc. They are taking advantage of the primary trend. A lot of the swing traders and position traders are going to be taking the secondary trend, right? That's what we're trading specifically inside of TTI. So the primary trend up, I think that we can all agree that over time going up, betting long is probably better than betting short in a primary uptrend. And then within that primary trend, you have something called a secondary trend where you still have oscillations to the downside. They're just shorter term. And over time, you have a series of higher highs and higher lows. Lastly, I'm going to go through something called the short-term trend, which is generally days or weeks. Once again, this is going to be even faster in terms of the market oscillations, but they're still going to have market oscillations. All of these, no matter what the trend length is, are subject to human psychology and the idea that markets oscillate and trend, right? So if the primary trend is essentially just up right now, and the secondary trend is a series of higher lows and higher highs over weeks or months, what do you think the short-term trend is going to look like? Well, it's going to look a little crazy, but it still follows the secondary trend. The oscillations are just going to be a lot faster. So if I can draw this, you get the idea here. What types of traders are going to be taking advantage of the short-term trend? Well, these guys are going to be generally swing traders that take advantage of like 3 to 5 day setups, something like that. Guys that aren't necessarily trying to hold things for, I don't know, half a year. Sometimes inside of TTI, we'll buy 180 days worth of options expiration, or the expectation for the trade might take 6 months. You know, we're really going out there because we want to build a system for guys that don't have a lot of time on their hands The guys that do, professional swing traders or full-time swing traders that do sit at their computers all day, that really, they push the envelope in terms of volatility and the types of stuff that they are trading, they're looking to hold things anywhere between literally overnight or sometimes up to about 5 days. For the rest of us that don't sit at the computer all the time, we might not be able to trade that window because we might be at work. We might own a company. We might be spending time with our family and we cannot monitor the market. And if a stop loss is hit or a take profit is hit, you don't have it on the books, which a lot of guys don't, you're going to miss out. So if you don't have the time to dedicate to these short-term trends, days or weeks, but anywhere between 1 day, literally overnight, up to about 5 days, just don't play there. Don't play this game. So the short-term trend is going to look crazy, but it's still oscillating to the upside over time. Now, when we say that the primary trend is up, and in 2024, we expect that the market is going to be bullish, and we have three main reasons for this. We're in a secular bull market, which started in 2013. Just showed you that. We're also in a cyclical bull market, which started in 2022. You can see right here, end of September/October of 2022 was the next leg up in this cyclical bull market, right? The fourth year in a presidential election cycle is overwhelmingly bullish over the last 80 years. You can watch any of the last 8 videos that I've put out to see the actual stats behind that. And then lastly, as January goes, the year goes. There's an overwhelming edge going long if January, the major indexes close green. Something like 86.5% of the time, the rest of the year is green. Now, there's varying degrees of how bullish the market is actually going to be, depending on a bunch of other factors. It could be anywhere between 5% and 15%, or maybe even a little bit more. But as January goes, the year goes. And as of right now, prior to some of the mega cap tech stuff, we are up in January, right? We do have some mega cap tech stuff reporting early next week, but until Wednesday, we are in January and we are up about 2.5% on SPY. So we have three major themes here that are saying that 2024 is going to be incredibly bullish. The primary trend is up. The secondary trend is up. As of right now, the short-term trend is up, and we have all this data supporting that this year should be very good. When we say that cracks are appearing, right, in the short term, and that there might be a pullback in February, it does not invalidate the thesis that the primary trend is still up, and that our overall idea of 2024 is going to be bullish. Like, it's still there. The primary trend is still there. The secondary trend is still there. When we say the short-term trend might be challenged over the next 2 to 4 weeks, we are thinking the blue line, not the red line, not necessarily the black line. It's the blue line, right? Now, why do we think that there might be a potential pullback? Well, first off, there's some momentum divergences across the major indexes. You can see here on the weekly and the daily that each new high is being met with just a little bit less buying enthusiasm, which is generally at the very minimum, a caution sign. This doesn't always play out. As a matter of fact, divergences can never play out, right? So this is not a reason to absolutely close everything just based off that. It's just something we noticed, and we're using it as part of this February drawdown. Next, the month of February, statistically the weakest of the 6-month Goldilocks zone. Watch the previous video. We show the actual stats and charts there. And then lastly, if you're a technical trader, we understand that resistance levels that get broken, in this case, literally the all-time high in SPY, what happens to these resistance areas over time? They typically get pulled back into, act as support, and then take off again. We don't expect the index to be any different than an individual stock, right? We expect this resistance level near 475, 470, something like that, to be tested as a new support level for the next launch pad throughout the year. So we have three reasons why we are short-term bearish, potentially, not actually yet. We haven't really closed anything. We took some profits on Friday. We're not opening shorts. We're not closing everything and waiting. We're just prepping for the situation if it happens. There's three reasons why we think that over the next 2 to 4 weeks, there's some short-term potential. And by the way, it's potential. It might never happen. So let me go into 3 questions I got in the email in particular and talk about this idea. Let me go back so you guys can look at this beautiful illustration of trend lengths. First off, we are on the lookout for a short-term trend reversal, not a primary or even a secondary trend reversal, right? It's just a short-term pullback. That's it. So this is where a lot of you guys get in trouble on the longer time frames, specifically the guys that aren't trading short-term trends. If you can't sit behind your computer, don't worry about any of this stuff. All right. But when I put out a video like on Friday, you immediately assume any sort of bearishness, right? Anything that comes out of my mouth that might be bearish, you go, well, what about the 2024 primary uptrend? It's still there. Here's the 3 things that I responded to this weekend. Should you sell your best positions? Absolutely not. I'm not your financial advisor, but I will tell you statistically that selling your best positions that you grabbed in Q1 of 2024, market leaders, some of you guys are in some incredible positions, semiconductor names in particular. Is there going to be a pullback? Potentially. It's a little frothy, but should you give up your incredible entry if you scored something great? Probably not. Because if this doesn't play out, if for whatever reason we don't get a pullback on in February, you are now playing a very hard game of catch me when these things break out and start running. Playing catch up is a really bad way to trade. It's really hard because every time you buy, if the market pulls back slightly, you think you bought the top. If you grabbed incredible entries, potentially just ride through this next little pullback if we even get it. Next, should you position yourself short to take advantage of this? Probably not. If you're not able to sit in front of your computer and monitor these shorts, I'm sure you guys are aware if you traded in 2022 that even just buying puts and waiting does not mean you make money. A lot of these puts depreciate in value very quickly if there's any sort of dead cat bounce, or if there is that reversal back to the upside, which we think there's going to be, even if there is a pullback, your puts are going to get fucking destroyed. Let's just be 100% honest. So maybe it's not best to position yourself short to take advantage of what we think will be a very brief opportunity that once again may not even occur. And lastly, some of you got frustrated with me saying that we're flip-flopping our stance. Guys, listen, like I just pointed out, primary, secondary, and short-term trends, we can be bullish on two of them and be prepping for the third one to potentially give us an opportunity to do what? And this is what this entire video is about, to buy the dip. If we expect, a pullback, and if it were to happen, it's going to offer us an opportunity to position ourselves into the leading stocks year to date for a bull-dominated 2024. All right? This is a long-winded video for me to basically tell you to chill the fuck out and stop being an idiot. Respectfully, the market rewards patience and time. Patience and time, both of which a majority of market participants lack. There's a reason why I don't have 10,000 subscribers right now. It's not because the content's bad. I probably teach you guys more shit than most people. It's because I don't have a fucking video of a truck driving in the right-hand side or somebody completing a puzzle or a maze, because in today's world, everything is just short-term gratification, ADD fucking everywhere. There's an edge in just taking a step back, exhibiting patience, and allowing time on your positions to pay you. Remain in line with your time frame of trading. Don't trade short term if you're not able to trade short term. Understand that markets oscillate on every time frame and attack the opportunities as your system predicates. Guys, my name is Hamilton. I'm here with the Trading Initiative. Hopefully this taught you something. Please like and subscribe. Leave a comment below, and I'll catch you in the next video.